Welcome to the Daily Update. This is being prepared Thursday, June 2nd, where we'll look at the action in the market today and then see how things look for Friday, June 3rd. We had a good, solid up day. Of course, now the question is, can it continue? A lot of the signals that we've been seeing, a lot of the positive backdrop that's been falling into place, that seemed to happen at least on Thursday. The markets really like that. We ended up closing right at the high with a good solid gain. A lot of our indicators are showing much improvement. On a short-term basis, we could be overbought. Now, we still have more room to go if the market wants to go up. Plus, we have the most important economic report of the month coming out, and that'll be the employment situation report. So let's go back and look over what happened during the day on Thursday. Right at the open, we did gap lower, actually, at the open. It looked like we were going to have quite a negative day. Microsoft came out with some news before the open that kind of freaked out the markets. And of course, they're so big, they had such a big influence. Well, that didn't seem to last for too long. And even within Microsoft, it's like, well, wait a minute, maybe what we're saying here is not all that bad. And investors were saying that too, so they went in and started buying things. At first, prices went sideways, which built a solid base right after we gapped open. As the day went on, buying entered and then took prices positive, so we went back above the unchanged level, and we even got above the daily pivot, which was at 41.14. Buying continued and took prices even above R1 at 41.54. Going into the close, prices stayed above R1 and then ended up closing at the high. Now, some people say, well, I don't know about that advance that we saw. Maybe that was just short covering. There's a lot of people that are short in the market. They sell when they get in. They have to buy when they get out. And that might be true. But we also saw some solid advances. It was an overall positive day. We ended up being up 1.84%. As I mentioned, we were below average on the volume, but we've seen that. That's become the norm right now as we go through this difficult time. The fixation is the technicals. Yeah, they're still negative overall, but they're showing a lot of improvement. And on a short-term basis, as I said, we may be overbought. Inflation and interest rates, which produce growth concerns, that's what the market's really fixated on. Of course, the other geopolitical concerns that we're worrying about, and then earnings. As I said at the open, Microsoft had an impact on that, but it didn't last very long. What are some comments that we can make? The markets went higher after working off the short-term overbought condition. Can it continue? But now we're back into a bit of a short-term overbought condition. That's what happens when we get in real choppy environments like this. It doesn't take much to become overbought or oversold. The technical indicators are really showing some improvement, and I'll prove that with the charts that I show you. The VIX dropped below 25 for the first time in about a month. And there was the negative news that was floating around out there, but it was pretty much ignored. And that's the sign of a market that wants to go up. When it takes bad news and ignores it, or if it takes good news and then uses that to justify it, we can also see that in a reverse pattern where when we're going down and good news comes out, but the market still keeps dropping anyway. That's why we watch these things really closely, because it can change all the time. Microsoft lowered their earnings guidance before the open, which shifted the markets more negative. The futures had been pretty solid. And there's something that I'm going to share with a little later about the dollar to kind of back up what I've been seeing as I watch things, especially when the market's not open. That guidance then took things down negative after having been positive for most of the night, but buyers then came back in and entered anyway. Oil was up to almost 117. Sometimes that can freak the markets out. Didn't happen on Thursday. One of the FOMC Fed governors, who's also a voter, said that a September pause in rate hikes is not really realistic. So we're seeing kind of a consistent walk back now. After last week, there were statements saying, yeah, maybe in the fall, we won't raise interest rates anymore. The markets really like that. We thought maybe that could be a Fed pivot. It was not Fed Chair Powell that said that, which made us kind of more suspicious of that. Well, now other folks, including Fed Chair Powell, who made more hawkish comments late last week in the Wall Street Journal, And then this just is saying they might be needing to raise interest rates even more. Gas is still going up like crazy. Fear is high but not extreme. And we're still in correction territory with the S&P. We had the first quarter productivity. It was revised to being down 7.3. They expected it to be down 7.5%. So that was less than expected. Where we did get it declining 7.5% in the preliminary reading. Unit labor costs were revised to being up 12.6%. They expected it to be up 11.6%, where we saw that in the preliminary reading. What we're seeing here is productivity is going down, where the cost of labor is going up. So that's pretty negative overall, but the markets just chose to ignore that, at least on Thursday. Initial jobless claims ended up decreasing to 200,000. They had expected them to be at 210,000. So that's just showing a little tighter labor market. Factory orders increased 0.3% on a month-over-month basis. They expected it to be up 0.7%. So that was weaker than expected. And the last time we had this report, they were up 1.8%. So we're seeing a bit of a slowdown that way. The ADP, which estimates new jobs, that came in a lot weaker than expected. They expected it to be at 295,000. It came in at 128,000 jobs being added. The condition of our trend, it's negative, but it's weakening and starting to cross positive. Now that would be expected, and I'll show you that when I get to that chart. I've switched our bias over to positive. Our momentum is also mixed to positive. We still have a lot of negativity in the background, but we're showing a lot of improvement. We've been showing some signs of strength up through Thursday's session, so I switched that back over to mixed, slightly positive. So let's go back and look at the day's session. First, looking at sentiment, we're up into the fear category, and with the advance, we were at 26 the last time I showed this. We climbed up to 29, still fearful, but not extreme. And over on the right-hand side, you can see how we're finally starting to come up out of this reading that we've been camped in for a long time. The VIX is still showing a decrease on a closing basis with the line chart, and we're coming down, and we closed just about at the low on the bar chart. And we also are noticing here that we dropped below 25. That's not really a big deal to me. 20 is kind of the mark that I've used for a long time. But just the fact that we're seeing this coming down is positive. The VIX of the VIX is really going down, both on the bar chart, and it's really decreasing even on a closing basis, even though we went a little bit sideways. But overall, it's been really declining. Ulcer index is getting back down to a more neutral reading. That shows that fear is coming out of the market. And here's the longer term look at that same chart. Equity put-call ratio declined on an up day, which can be expected, and it also declined with our 5-period moving average. Here's one that came from IsabelNet, put out by Bank of America Securities. This shows the buybacks by corporate clients. They're peaking after recent highs, and that's way over here on the right-hand side. They had been really coming down, but now we're starting to see them come back up. Another thing is we had the ISM manufacturing index, and then comparing that to the S&P 500. The purple line is the S&P, and the scale is over here on the right-hand side. That's what RHS means. Where the gold or yellow line is the ISM manufacturing. That's on the left-hand side. And it just shows that there's a real strong correlation. Now, this is a monthly chart. We tend to look at daily charts, but this gives us some kind of an indication overall, where we're seeing ISM starting to turn back up, and we're seeing some improvement in the S&P. Can that continue to go up? Also, another chart looking at the ISM PMI, that's in black on this chart. And then what they did is they took the new orders that are also measured in that chart, and then they advanced it 3 months just to give us an idea of the correlation between the two. But we've been seeing a real decrease in the new orders. Is that going to bring the ISM down? Sentiment as far as treasuries, up on top you have the 10-year yield, which we look at quite a bit. On the bottom are the consensus bulls for bonds. And this is inverted. This isn't like the VIX, where when it's high, that's fear. When it's low, that's greed. Well, when it's high here, that's showing greed. When it gets down to the low part, that's showing fear. And we're coming off of a pretty extreme reading of those that are bullish on this chart. When this really peaks up, at other times, we see a real decrease in interest rates after that. Oftentimes, well, we've peaked up right here, and now we're starting to see interest rates coming down. Another chart is the active asset money managers, or hedge fund managers, or actively managed mutual funds. They had become extremely fearful a couple of weeks ago. We had a reading even under 20. We saw some improvement in the previous week, and that's still going up in the latest reading. And the S&P 500 is on the bottom. We also had an update of the Chicago Fed National Financial Conditions Index. We're going up, but we're still below the black line. So that means that according to this, things are still okay. When we get concerned is when this reading goes above the black line. The AAII survey came out, and we're back up to more of a neutral reading. We had been really extreme negative. Well, with the advances and somewhat improvement situations that we've been seeing in the market, those individual investors are not quite as bearish as they had been. Looking at inflation, gas just continues to go up and up and up. We're up over 4 now. Heating oil hasn't hit what it hit before, but we're starting to show some real advances there. This chart, this will probably be the last time you see this chart. Just looking at this is really not telling us anything. What I did is I was playing around with this, and I switched it to a monthly basis, and I have the CRB on top, which is one indication that we use for measuring inflation, kind of my main one. When this is going up, that means inflation is going higher. Well, down below, I was able to find a ratio that seemed to work better, and that's on a monthly basis. When this ratio is going down, that's showing more of a deflationary pattern. We have inflation against deflation ratio. So when this is going down, that means inflation is lessening and deflation is going up. So what we've been seeing since the whole COVID plunge, commodities have really been going up. Inflation had been going up, but is getting really choppy, but it's still leading the way overall. But it's not really spiking up the way you would think it would be. Now, another thing I wanted to play right here is in yesterday's video, I mentioned Jamie Dimon, the CEO for JP Morgan, the biggest bank in the U.S. So when he talks, people listen, just like the old E.F. Hutton commercials, if you remember any of those. So I'm going to try to play this video and see what happens.
It's a hurricane. Right now, it's kind of sunny. Things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And it's you better brace yourself.
Let's go in and look at the S&P 500 sectors. We had all but one. Energy was down. That's the best performing sector, but all of the other sectors were up. And the one that had been performing the worst, discretionary, it was up over 3%. A lot of people are saying, we don't really trust this. Those areas that are in heavy downtrends, they saw real improvement, but the one that's doing really well, it saw a decline. And this just goes back and shows that energy is up over 50% since the all-time high. Discretionary, even though it's been improving, is still down 24.48%. I wanted to bring this up. This is not a sector. This is an industry group of semiconductors, and this is the SOX index. And there's other indexes that you can look at, but I've used this one for a long time. The reason I brought this up is, we're in a negative downtrend, but we were able to break above the 50-period moving average. And that could be positive, since semiconductors play a really big role. However, look down at the bottom. We saw a break above the moving average on a decrease in volume, so that could be a little bit concerning. Our technical alerts started off negative with the S&P going below 4,100. The real estate sector had a BPI cross below 30. Then things started to look better. The NASDAQ got back over 12, then 12.1, 12.2, finally at 12.3. As we got closer to the close, nothing really for the S&P 500. Canada was able to get back above 21. Consumer staples, that's what we've been watching. It crossed above 30. And I'll have some other charts to go more in depth with these staples later on. This is called a technical score. And I have access to technical score charts, but they lag 1 or 2 days. And so that's why I don't show them. Just because it's like old news. And when we're looking at daily charts and you have a chart that's 1 or 2 days old, that really doesn't help us very much. All this is showing is when they take a lot of technical indicators together, cram them into one, it's showing that as we were declining in the S&P, the indicators were giving us a pretty extreme negative reading. It was down to 7.65 before, but this is still a pretty low reading. Are we getting a bit of a bounce off of that? Well, as we've been showing a little bit of an improvement, we're actually coming up to the 37.35 mark. Let's go back and look at things intraday. We gapped lower. That was really on the heels of the Microsoft news. We set up a base, and it looked like, okay, are we going to break down here to S1? Nope, we just went sideways, and then some buying came back in. We saw a pretty healthy push above the daily pivot. We were able to get up to R1. That really didn't slow things down all that much. We went above R1, dropped a little bit below that, and then into the close, we saw some additional buying, and we even had a little buying spike right at the end. Looking at this on a daily chart, we're still above the pivot level. We broke above this short-term range that we've been in the last number of trading sessions. So that's looking pretty positive. We still have some more intermediate term support overhead if the market keeps going up. We have the pivot and the longer term support below if we start breaking down. Looking at the bottom, this is a bit of a concern, an up day on a decrease in volume. We're down 12.92% from the all-time high. Our technical overview hasn't changed, although some of these things are improving. The positive ones are looking a little bit weaker in some areas, but still pretty positive overall. And then with the negative ones, I'll just click off the list here as we go along. These are still decidedly negative, but showing some signs of improvement. Our trend analysis. We can see that the black line, that's going down. That's the ADX. There's a moving average plotted on there too. That's above where we're at, showing that the ADX is weakening and getting closer down to 20. And it's pretty hard to see, but we're starting to see a cross between the green positive buying power line and the red selling pressure line. So it's kind of a jumbled mess right now. This is suggesting that we're starting to switch the trend. When the lines come closer together, that's when the ADX declines. And if we stay in that kind of an environment for a while, the ADX could really drop down into a non-trending environment. But if we see a lot of strength with the green line going far away from the red line, that could turn the ADX back up. Our runes not really changing. We were flat overall with our oscillator, still showing a decrease in selling pressure, also a decrease in buying power. Looking at breadth, we're working off of this positive divergence that we saw, where we set a lower low with the S&P, but a higher low based on price with the advanced decline line. We did see a bit of a bounce based on price as well as volume, but we're still below the moving average based on volume. The advanced decline ratio bounced up a little bit and not giving us a real extreme reading right now. New highs and new lows that looked like they were rolling over yesterday. Well, we turned back up on the 5 period and we're turning back up on the 10 period as well. Accumulation distribution, we had come down, but we're starting to turn back up. The moving average is starting to go up as well. That's positive. Looking at the stocks that are above the 200-day simple moving average, we're seeing a nice bounce up off of that, even though we didn't go to a real extreme negative reading where we saw major lows in the past. Here's another chart just showing the S&P on the top, and here's some lines. And you'll notice that I don't use an awful lot of trend lines. I think it's too subjective how they're drawn. I know there are textbook definitions for this. I just don't use a lot of trend lines unless they're really, really obvious. And I see other people that draw trend lines and I'm like, I never would have drawn that trend line. I think you're just trying to justify what you're saying. But that's just where I come out. I do really heavily rely on support and resistance, and those are horizontal lines. We have a dashed line coming down that just shows that we're in an overall downtrend. These are at points when we started to break through support. When we broke through this area, that was pretty negative. We came all the way down here and we set a higher low down here. It's just showing as we've been going down, it's also suggesting that we're seeing the bullish divergence. Possibly we've hit some overhead resistance here. We bumped into a trend line. The 10-day average of the S&P highs and lows, we're getting more into the neutral territory. So if we continue to go up from here, I probably won't show this chart for a while. Short term, we're still above the moving averages on the 20 period. The rate of change going back 5 periods is still extreme positive. The rainbow, we're trying to get up into the rainbow. It's going to be a lot more positive if we can break through all of these moving averages, stay above that, and start to see the rainbow turn back up. McClellan oscillator had been really extreme positive, worked that off, recovered, but now we're getting back into extreme positive territory. But this still could go even higher. Force index also was hitting up against the Keltner band, worked back down a little bit, advanced, and is not necessarily extreme right now. Stochc RSI is extreme positive, as is the Williams %R. 20 period, we're not necessarily extreme right now. We saw a really nice bounce. 50 period is showing in advance, and the 200-day is now turned back up. Stochastics. If you use stochastics a lot, this might concern you a little bit. On a short-term basis, we're pegged at the top, but we were pegged at the bottom for a long time, and we've been pegged at the top before. Intermediate term, we are extreme positive right now and trying to roll over, where we're looking a lot better with the longer-term stochastic. Intermediate term, all of our momentum oscillators continue to be positive. The vortex also looking better, in advance based on the buying power, a decrease on selling pressure. Swinland trading oscillator actually declined a little bit on an up day. Sometimes this has been useless. Other times this has served as kind of a leading indicator of what's going to happen. But we saw a decline based on price and volume, even on a solid up day. BPI hung in there in the last couple of days by just giving us very small up dots. Saw a little bit of an expansion on an up day, so this continues to be positive, but we would like to see this bar a lot longer. The PMO is still positive overall, as well as based on price and volume. PMO study showing extreme positive now, but it still could go higher. The buy signals starting to get extreme. Those that are above 0 continue to show improvement. Summation index, we finally crossed above 0 on the summation index based on price, but it had been going up anyway, where we've been above 0 for quite a while now based on volume. The CCI 14 period coming down from an extreme positive reading. Now we have the 20, which is starting to go into extreme positive territory. EASA movement is still showing improvement, and we are above the dashed line. Volume intensity, that is decreasing as we see average volume fall. Chaikin oscillator, it had turned down yesterday, started to turn back up after today's session. Chaikin money flow also showing some weakness with the green histogram here, and the moving average is flat to slightly declining. Money flow index continues to show improvement, and whenever we're above 50, that's considered positive. TTM squeeze, we actually switched over to a blue bar now, so that is much more positive and longer term. We're working off what had been a really extreme negative reading. Our different charts, Heiken Ashi, still showing open candles, so that's positive. The Kegi is still black, so that's positive. The Renko hasn't drawn anything new, but still has an open box. That's positive. 3 line break is also looking positive. Our different trading systems, the Elder Impulse system for the S&P is still positive, as it is for the SPY. Our SAR system is still positive because the dots are underneath. We're still neutral with the go, no-go system. Longer term charts, we're still well below the moving average. We're showing some improvement with the 50 period moving average study, as well as the 150 and 200. Special K is trying to turn up, but it has a long way to go to get back to the red line. But just the fact that it's turning up could be positive. So then we have a Fibonacci chart, which measures from a low set in early 2021 all the way to the all-time high. This had been acting somewhat as resistance. Well, we've been able to close back above that. If we start to fall from here, will that act as support? Then a longer term look from the COVID lows to the all-time high, and I'm trying to use different colors and not draw too many things to keep it easier to read. We're well above the 61.8% retracement, which served as support. We broke through the 50%. Now we're seeing if can we get up to the 38.2 retracement. That could act as resistance. If we start to fall, this other level that acted as support may end up acting as support again, but that would really turn things back quite negative. Looking at the broad market, the diamonds are still positive, as are the Qs. I wanted to show this chart of the small caps where we actually came back and were able to get above the 50 period moving average. It's the only one that I noticed out of all the indexes that we follow. And we like it when small caps are going up because that helps some of our indicators. And also it just shows that people are willing to get into smaller stocks that are considered to be riskier. Looking at the Vixen, it's also dropping just like the VIX is for the S&P, both in the bar chart and on the line chart. Looking at the broad market, the dollar index. This is what I'm starting to see. During the night, I was watching the futures when the market was closed. I noticed the futures were up and the dollar was down. Then the news came out, some economic reports came out, and then the Microsoft announcement came out. The dollar switched back to positive and the futures went negative. I'm starting to see this when the dollar is negative and the futures have some trouble. That tends to fix itself. When they're both moving in the same direction, that tends to be more negative. And I have another chart just to show that. But this can change at any time. It's not a steadfast rule that applies always. But dollar strength does not help the stock market. So the dollar going down does help prices to go up higher. What we're watching for is, have we spiked here? We're back down around this area to see, are we going to continue following or will we be able to bounce from here? We've been watching this chart for quite a while. Then here, the US dollar and risk sentiment, where we have on the left-hand side, here's the dollar, and then we have the S&P 500 on the right-hand side. So looking at this chart, the dollar is the black line. And as it was going down, the S&P was also going down. Then in late 2021 and early 2022, as we were seeing the dollar going up, the S&P did okay, but then we got into 2022 and we started seeing some problems here. Are we going to see them couple together or start to go in opposite directions? So what I've done is I have a correlation chart. And if you hear some pounding in the background, that's because of noise that's going on for construction. A lot of times, the relationship is really hard to figure out. Right now, what we're seeing is a pretty strong correlation. When the dollar goes down, stocks go up and vice versa. That means they're moving in opposite directions. If we get back up here closer to a 1, that means they're going in the same direction. And so we'll keep an eye on this. Oil is still very high. It was up to 116.87. Gold futures were able to get back above the 200-day moving average, as well as on the ETF. And here's the longer term look. And I pointed out the lower lows in the silver ETF. I didn't point out what we're seeing is a series of higher highs in the gold ETF. Here's silver with the recent death cross. It was up 2.29%, but we're so far below the moving averages that these will continue to decline. And here's the series of lower lows that we've been seeing with the silver ETF. Here's the correlation between the S&P and oil, where it just shows they're having a very strong relationship with each other right now. If one's going up, the other one is going up. Looking over at bonds, we saw another decline based on price. And the bond ETF also was up a little bit. We came up to this 50-period moving average, bounced back down from that, but showed a little bit of a bounce on Thursday. The high leverage loans were up slightly. Yields up to kind of flat with the 30, came down a bit with the 10 to 5, and they're exactly at the same rate right now. We're not inverted, but they're giving the same yield. And we saw a bit of a decline in the 2-year, where we saw a bit of an advance in the 3-month. Our possible positive scenarios: Copic curve still generating that signal that seems to be valid. The spike, we're still going back up slightly with our interest rates, so this one isn't as viable right now. But if you look at this, the other times that it generated a signal, it wasn't necessarily very long term. I was just looking at this as a potential Kickstarter, and then to see if some other things could come into gear and push us even higher. The mass index has generated a signal recently. The bottom fisher also looks like it could be legitimate. This is the small cap ratio. We were up slightly, but we want to see a noticeable spike on this chart that we're just not seeing yet. And this is the one that's still looking more viable. The staples to S&P 500 ratio did decline, and this looks like it could be a spike. So what's our outlook then for Friday? The technicals are turning positive, showing some overbought conditions in the short term. Sentiment remains really pretty negative, but not extreme. Growth and value, the battle goes back and forth. Economic reports. We have the big employment situation report coming out on Friday. We also have the IHS Market Services PMI, the final reading. Not a real big influencer, but what can be a big influencer is the ISM Non-Manufacturing Index. We have 2 really solid economic reports due out on Friday. Geopolitical events, the same things that we've been talking about. Russia-Ukraine could be positive or negative. The supply chain might be getting better because China's lessening their lockdowns. The markets are still fixated on inflation. What are interest rates going to do? What about growth concerns, not only economically, but within companies? Oil is still getting quite high. Earnings as they come out, Fed speak, well, they seem to be walking things back as far as what they're saying, and that bleeds into their policy. And then the longer term scenario with Japan, just keeping an eye on things there. So what are our scenarios? To go down from here, which we still are negative overall, so that's why it's yellow, and the things that I just talked about, plus the recent trend of selling into strength, and also that we're short-term overbought. Yeah, I added that on the next one. The technicals are showing a lot of improvement. What could go up from here? The technicals, they're looking a lot better, and sentiment is still quite negative. The possible positive scenarios, Copic curve, bottom fisher, they've turned up, staples. That's looking like a legitimate signal so far. The mass index generated a signal. We're not really getting much from the 2-year yields. And then, of course, the Fed pivot, which doesn't seem to really be playing out right now. The technicals, they're showing some improvement. We have pivot levels. The shorter term moving averages, that's why I show the rainbow chart and the 20. Fib retracements, they could act as either support or resistance. And then other previous levels, especially from previous days, like daily pivot levels, they may provide either support or resistance. We're not in a sideways trend, but that could change pretty soon if the 2 lines stay pretty close to each other. But we're still going with a negative trend for right now. So our conclusion is the S&P could be turning positive. How's that for definitive? Turning positive, but possibly overbought. Again, kind of a qualifying statement there. Intermediate term, turning positive. Long term, still negative. So thank you. Have a wonderful Friday. I will prepare Monday's video as soon as I can. I'll also be preparing the weekly video as well as the intermarket analysis video over the weekend. So have a great weekend. Have a barbecue. Yes, I'm trying to run this out a little bit to get some more padded time to avoid the end cards from displaying before the video is finished.